Alright, good morning, guys. I'm gonna run through some things, and then I've got to take off and go to a doctor's appointment, but I'll be back probably a little later, around like 11:30 or 12 and then I'll hop on stream. But there was no Pickles Picks last night, so I'm gonna do it this way this morning. First off, the drop in ES recovered pretty strongly overnight. Moved back above yesterday's close at around 4 a.m. And pushed back up into the 68, 67 resistance here. So far, that remains unbroken. That resistance was also resistance yesterday, but this is a setup for an inverse head and shoulders here on like the 15 minute. If we get a pull back towards like 68.12, that would set the next leg up pretty nicely. And then, that resistance might just get broken at market open as well. Remember, above 68.65, or wait, no, I'm sorry, 68.90, things start to turn bullish again. That puts us back inside the failed trend, or retest thereof, which we have not gotten yet since failing the trend yesterday. So uh, that's probably the first place to look for a breakout to the upside. Right now, I mean, things are just still fairly neutral day over day. So um, mostly flat. There is an upside gap up there on SPX also. I think 68.81 that remains unclosed from yesterday's market open. We're a little closer to closing that, but it's still open as of right now. Something to note. Some of the put sellers backed off. I know VX is now down, but correlation between VX and CashFix picked up with the market open last night. Amazon had a pretty nasty earnings, um, so we did see some put sellers finally back off and close their short puts, and correlation rose a little. Dollar's down, but Bitcoin is showing some signs of risk on, up 6.71% overnight. Gold and silver moving back up. Gold up 6%, or gold up 1%, silver up 6%. Oil still underperforming, but precious metals doing very well. Go check out. Game of Strike here. The overnight move puts us around this level. Um, here at 68.35, just above it. I think most of this is sold puts, and breaking out above here leaves pretty flat gamma to the upside out to like 68.90. 6,900, so plenty of room to continue breaking out to the upside if we open right here. If we open a little bit lower, get slightly more of a rejection over the next 14 minutes, then there'll be a little bit of resistance to the upside, but support at 6,800 for now. And then below 6,800, things drop off pretty sharply down to 67.75, 67.70. And then there's, major sold put support in this range that was accumulated yesterday. If we go out on all expirations, mostly the same is true, except the 68.50 level being a little bit more important. And that might be preventing an upside breakout. Any failure pretty much pulls back to major support at 6,800. Breakouts above 68.50, very bullish. Plenty of room to move. 69, 6900, 6910. Delta on the 0 DTE. I mean, well, there's plenty of negative delta to the upside. There's big resistance at 6,900 and 6,950. Most of this is squeezed off overnight. So a little bit at 68.50 and 68.80. To the downside, Delta starts to thin under 67.70 and pretty much continuously falls off down to the 6,700 support. This was a major technical test. I believe the December low we tested yesterday, so getting a relief rally around here, not surprising. But we will be watching like the 69.17 level on futures or delta neutral on SPX, delta neutral on the weekly on SPX as a confirmation that a full reversal is underway. It's not simply just a bear rally. The gamma curve flattened quite a bit, obviously, with all the put selling. The overnight move puts, let's see, slaps an additional 16 billion in gamma on the chance. Not a ton of gamma added with the overnight bounce. And gamma falls off pretty slowly to the upside too. So uh, I'm not entirely sure that we get that much of a squeeze, but I would say above 68.90, the pace of gamma falling off starts to pick up quite a bit. There is room to the downside, but it's also pretty grindy and slow. For dealer positioning, I think things largely just got more bearish. Um, yeah, GN, DN ticked up, VN, GM also. Delta continued to fall into yesterday's close. Options became more sold, and it looks like Delta started to pick up on the downside move, which indicated that some of those short puts started to get squeezed out into close, which we know the 6,800 level had quite a lot of them. Those are now back in the money, so those metrics are a little bit off, but we also saw selling out on the 30-day, and this was obviously major support. DNG and also moving up here. Skew adjusted delta declining, and then gamma also continuing to slide more negative. This gives us probably a shitload of negative gamma on the expiration. It's like about $17 billion worth. This makes things squeezy and gives us a lot of range for the day. I don't think the delta's the delta's kind of crazy too. Delta's at 54 billion, so yeah, um, definitely a lot of potential range. What that range is going to be, we'll talk about in a second. Looks like out of the money put leverage fell really, really sharply. Puts got substantially more expensive after several days of not moving. Calls got substantially cheaper. Call leverage decreased to the upside of spot, but far out of the money, like 5% out of the money. Call leverage started to rise. Put leverage picked up in the money. And puts and put delta both priced up really quickly. And then on the fall side of things, not too much of a change here. I mean, VRP widened on the 10-day, so even more benefit to put sellers, and that's why we see all those sold puts to the downside of spot. Huge premiums to get collected there. So, and definitely worth the risk. VRP 10 is like positive 13 points, which is wild, and very attractive. And skew continues to move up on both the 10 and 30-day tenors, so probably a lot of puts closing, but you know, people moving more towards calls, so and betting against this near term increase in implied volatility. um you can see that IV kind of falls to the upside of spot in today's expiration, and then picks up again above like 7,000. That does make the like 6850 to 6950 range a little harder to break through, given a lot of those calls are probably sold. But as long as we don't slip, then we could probably see volatility crush out. The MM's pricing in 140 points for the implied move today, with Jesus, the SPX options pricing in about 99. So that's like a roughly 120 points net, which gives us upside range out to about 6880. And downside to about 6715. It's quite a lot of range. There is some data today. I think most of it after market open. We have used car prices, which rocketed up. That was at 9 o'clock. Used car prices went to 2.4%, from the prior print at 0.1%. And then Michigan consumer sentiment is at 10 o'clock. And I think the Jefferson from the Fed is speaking at noon. Michigan consumer sentiment's expected to fall slightly, but I suppose the people will be looking at inflation expectations mostly, and then we did get consumer credit change at around 3 p.m. And that could be a fairly good bellwether of like consumer spending. So we'll keep an eye on that too. I think market opens in about 5 minutes. So I will leave you guys with this and say that if we open above 6840, bulls are probably going to take out the upside range to like 6880 or 6890 pretty easily. Here we go. But things still favor the downside, and any rejection before full mean reversion is probably going to be bearish, and things can sell off very, very hard. So be careful holding calls or over holding calls, especially into major resistance tests. I think the ideal scenario here would probably be to see realized volatility get crushed out. Given the options are overpriced in both directions, we may see just as much call selling at open with the overnight move as we see put selling. And if we get short strangled into the end of the day, things could end up being pretty flat in about a 20-point range from where spot is currently in the overnight, which has got us around 68.36. If we open below 68.25, things get a bit more bearish. But there's only 3 minutes for that, so it's fairly unlikely. Although it does kind of look like things might be getting rejected a little. Be careful of a loss of 6,900. That's the major level locally that bulls need to hold, and probably the most important flip point for price action directionally. It's very easy for price to fall back there and then kind of get stuck. And I think that's it. So I will take off to my doctor's appointment, and I will catch you guys later. I'll throw up GS Live data. Good luck to y'all.